RIN-TV coverage of the 2015 European Insurance Forum is brought to you by the Dublin International Insurance and Management Association. The global tax environment is evolving, and insurers and reinsurers are amending their strategies to ensure compliance while controlling the financial burden. We spoke with Mervyn Skeet, Global Head of Tax at XL Catlin, about the changes he sees and the impact on insurers and captives. Here are the highlights.
The trend in the global tax environment, I think you need to look at it in a couple of ways. That you look at it from a government perspective. Governments are very focused on the amount of tax that is being paid by multinational companies. They're looking very much at economic activity and ensuring that tax is paid where the economic activity happens. They have enlisted the help of the G-20 and the OECD in order to try and make that happen. So that's one of the trends. The other trend that's quite powerful is the public trend, public focus on taxation, which is probably higher than it's been for many years. The public's very concerned about both companies and individuals paying what they perceive to be a fair amount of tax. So the trends coming together mean that there's much more focus on tax than there's ever been, certainly in the last 10 to 15 years. So how will BEPS affect the insurance industry? I think it will affect all industries, actually, not just the insurance industry. So first and foremost, you have to say it will affect all industries. In terms of insurance and reinsurance, I think the key message will be that insurance is very different from other industries. You know, we often refer to the so-called widget maker that manufactures, you know, small pieces of equipment. Insurance is different from that. It's a service industry. And so one of the things we have to do as an industry is differentiate ourselves and ensure that the same bodies as we mentioned earlier, the OECD, the G20, and the countries understand why insurance is different. You know, some of the OECD papers focus on risk and capital. Well, risk and capital is exactly what insurance companies do, and we need to be able to articulate that clearly as to how any changes in that would be impacted for insurance. Thinking about tax burden for companies, I think you have to look at all companies. Again, it's not just insurance and reinsurance. You have to think about the industry as a whole. But insurance, as long as insurers and reinsurers are comfortable that they have true economic activity in the jurisdiction they're working in, then tax will follow that economic activity. And if tax follows the economic activity, then there's less for the insurance and reinsurance companies to worry about. There are a number of action points from the OECD which will impact insurance and reinsurance, perhaps more than others, and we can go through a number of those action points in some detail. But the key, I think, is that when you look at your tax burden, you should be focused on your business model. If your business model works, the tax will follow the business model.
For more of our coverage of the 2015 European Insurance Forum, visit the DEMA website or the special 2015 EIF channel in the RIN-TV On Demand library.